I'm David Wall with NAI Heritage Commercial Real Estate Services Worldwide, here with your August 25th, 2020 property tax appeal update for the state of Florida, where we are appealing property taxes around the state in all of Florida's 67 counties when appropriate. The trim notices, also known as the valuation notices, tax notices, have been sent out in most, if not all, of Florida's 67 counties by now. The deadline to file a property tax appeal actually commences from the date the tax authorities send that notice in the mail. It is not based on when you receive that information. If you choose to file an appeal in the state of Florida, I strongly recommend that first and foremost you have a definitive value that you can defend before the special magistrate and value adjustment board prior to filing that appeal. Why is that? There are times when the property appraiser in your county may actually have undervalued a property, although the tax burden may seem significantly higher than it ought to be. Sometimes this is due to millage rates in a given county. Alachua County, St. Lucie County, certain other counties around the state of Florida have been known to have consistently high millage rates when all of the tax authorities, water district, school board, county, municipalities, etc., by the time those are all added up. I urge you to get, whether with someone like myself over at NAI, or with a qualified property tax consultant who can assign a value or come to a valuation of your property before you actually file an appeal based on valuation. It takes time. And frankly, this is why I often encourage folks who are thinking about contesting those values to actually do so earlier in the year. I work on property tax cases all year long, and many of these properties are valued according to income. There are different assessment methods that are used for different properties. Sometimes cost approach is leaned on more for certain types of property, owner-operated, for instance. Income approach for typical investment properties. Multi-tenant, triple net, multifamily will tend to rely very much on income. But they're all going to look at sales. The thing with, of course, some of these properties is trying to find truly comparable sales from one to another. That's where my work with econometrics, multivariate regression analysis, where we actually quantify, when we have sufficient data to do so, being able to quantify the sale of one property, the variables that are involved, whether it be the age, the size of the property, and certain other features that we can integrate into a quantitative model. And when we've got a good statistical fit, it's a beautiful thing when those numbers are something that cannot be argued with. One of my favorite quotes of all time was many years ago, Daniel Patrick Moynihan, regardless of his politics, had a fantastic quote. He said, "You're entitled to your own opinion, you're not entitled to your own facts. So if the facts are this, how can it be argued with?" Many other things are frequently debatable with this evidence. When putting this information together, it takes time, and now we're in a very limited timeline to do so. Many property appraisers, it is suspected, and I'm not going to speak to any one county or any one elected property appraiser or their office, but it has been widely circulated that many property appraisers under pressure may be pushing for the maximum value, certainly that they could defend, for the tax roll of 2020, because there is a deferral that is applied with these properties. And next year, for the 2021 property tax season, those valuations will be based on the property value as of January 1st, 2021. while those market values are expected, generally speaking, based on what we're seeing in the markets today, are generally expected to be significantly lower than they are right now, if the just value has been determined to be thus at this point in 2020, next year, even though the just value may come down, the deferral value is something they can tap into. Now, they've been doing this with residential properties for many years in Florida. And in fact, we had a headline in our local Gainesville Sun some years ago where the question arose, our values are going down, but our assessed values are going up higher. How can that be? And that's because of this deferral piggy bank. Now, they don't call it a piggy bank, but I do, where they can only raise the assessment so much, certainly, and it's been that way for many years now with residential properties in Florida. They can only raise the assessed value so high, but the just value may be up here. They pocket the difference, so to speak. They set it aside, that's a better choice of words, into what I call the piggy bank. That piggy bank of value stays there so that when the market values start to come down, they have the deferral value, which they tap into. Now, you and I know this is not what the voters intended when they passed these amendments to the state constitution to limit how much the property appraiser can raise the assessments each year. Nevertheless, this is a workaround that the clever people at the Department of Revenue Property Tax Oversight have devised to encourage increased assessments even when market values are going down. Again, now I work with commercial properties, income properties, vacant land. There are some terrific people who work with residential properties. In the state of Florida, if you're not dealing with a very expensive vacation property, a waterfront property, typically it's very difficult to make a case with residential properties. And here's why. We have the homestead exemption in Florida, and we also have had, since 1992, when that amendment to the state constitution was passed, limiting how much they can raise that assessed value. Many people aren't so crazy about having that deferred value tapped into. Yes, it's portable, and you can take it with you when you move, and that's the way it's frequently sold. But it can also work against us because of the way the state of Florida Property Tax Oversight Department of Revenue has been encouraging property appraisers' offices to handle these deferrals. With commercial properties, I have represented in excess of $450 million in assets around the state of Florida. My work with NAI actually began by managing property tax appeals on behalf of the properties managed by our team in the office out of which I work. So the number one thing I want you to take away from this, first and foremost, if you decide you want to file a property tax appeal, that is to say, to take the appeal before the Value Adjustment Board, the special magistrate in your area, please, 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 first and foremost, make sure that you have a solid foundation for the valuation that you seek. Because, heaven forbid, you file the appeal and then find out, son of a gun, the property appraiser's office has reason to raise the value even higher. Again, I'm David Wall at NAI Heritage, Commercial Real Estate Services Worldwide. You can find us at naiheritage.com, and you can reach me on my personal cell at 352-328-9384, 352-328-9384. Thank you.